back, folks, and we're with our good friend Dale Pinkert from ForexStopHunters.com. Dale, are you there?
I am, Larry. Happy New Year to you,
Hey,
my
Happy New Year
trading
to
warrior
you.
brother.
Hey, listen, I want to congratulate you because about 2 months ago you were on our show here, and we're talking about the dollar index getting down to the below the 89 level, and that has been pretty much spot on, has been the low. So
Yes.
just like the restaurant business, what's the next thing on the menu?
Yeah, people want to know. I think the major point to make, and was really a tutorial on not putting a lot of emphasis on COT reports because it was back, I think, December 20th. The euro was under 120, dollar index 92-ish, and we had record longs in the euro by small specs and large specs. Commercials were short. And congratulations, the little guy won. So,
Yes.
the commercials have deeper pockets, and we have achieved target levels. I had a lot of confluence at that 88.5 level. We actually bounced off it yesterday. But I want to stress to people in their trading that just because you reach a price objective for your trades, like the downside being 88.5, does not mean that you automatically reverse. It means take profits and then let the market begin to develop. And I think that over the next few weeks, we're going to put in some type of base. There still could be higher levels. In the euro, we could go to 126, even 6.5, which would be 61.8 back. And there's a major weekly channel line, downtrend line up there. So, but I think the easy money has been made in cable. That's pound dollar and euro. And now we're going to enter some type of distribution phase of this dollar move. So, but I think it could run and do some work after a move like this. It takes time to turn a battleship around.
It sure does. Now, we have a question from one of our listeners about the COT, which is a Commitment of Traders report, because, a lot of these folks trade the actual Forex cross rates. They don't use the CME, vehicles, which are very good for the smaller trader. As long as you have 50 contracts, or less, you're okay in there. But, some folks like bankers and places like that, large corporations where they do hedges, they're working in the actual Forex market where we don't get those figures. We never know where they are because most of those Forex banks take the other side of the trade. And what has been your experience with the Commitment of Traders for the Merc? Has it been okay? I mean, does it do a pretty good job?
It is, but you still have to pay attention to your own work and price. And, I'm a technician. So I also believe that sometimes when people are promoting something too much, like record net longs of small specs in euro, that it's too obvious just to take that as a contrarian signal or trade. And go with your charts, Larry. You're a great technician. And use those areas instead of a piece of information like COT. It should be a tool, but not the whole. It shouldn't be your whole basis for taking a trade. It's just another tool.
I know, because the volume that we see on the Merc is, less than 1% than what we see in the euro when we're, looking at it. I had an interesting experience. A few years ago, I was over for Nomura Securities over in London doing an analysis for them, and I went into their foreign currency trading room, and Dale, there were 300 traders in there. And they've been there since about 6 in the morning, and they were doing 500 and 1,000 lots like it was a one lot. It was really a huge operation.
It's the hugest market, Larry. I mean, the
$8 trillion
bond
a day,
market,
they say. Yeah.
Yeah, bond market dwarfs all equity bourses and exchanges, and currency markets dwarf all bond markets. So that's really the bailiwick that I think all other markets spin around, that fulcrum, or what would you call it, linchpin, which is the dollar.
Okay, now what markets do you trade most often, Dale, in the foreign exchange?
Well, a lot of people have been trading the crosses, the yen, The yen used to be risk on, and when yields were going up, U.S. dollar yen would weaken, but instead it's been strengthening, and so the pound, euro yen, Aussie yen is a great risk barometer as well, and a lot of the yen crosses look pretty negative. In fact, the yen itself, the way it's paired in cash effect is U.S. dollar yen, so it's been going down, which means the yen continues to strengthen, and I think that's going to continue.
Okay, we have another question, and that is regarding how are the spreads on some of these things like the Aussie yen and some of these
Tight.
others? Is it
Tight.
tight spread?
Yeah, they're tight spreads. It's when you get into exotics like the Turkish currency or some of the more exotic currencies, the zloty, but they're pretty tight, a few pips at most brokers. I also, before we go to break, want to touch on crude. That was something else we talked about late December, that I felt with a weaker dollar we'd get one more push up in crude. And here's another example where the commercials were short before this last $6 run. I was expecting to move, I was talking 63, so it overshot my objective, but I think what happened yesterday in crude was significant, and now we're going to enter a corrective period in crude. And then maybe we could talk about indexes after the break.
Okay, since we're on the crude oil, I'm not sure, did we hit 60? I think we hit $66 a barrel, didn't we, yesterday?
We did.
And
we
so what type of a correction would you be looking for?
I think that we could get a fairly decent one back towards 55.
Wow,
that's
a decent one.
Yeah. Well, there are a lot of bears that are calling this whole thing in crude just a bear market rally, but I have some concerns about geo risk with Iran later in the year, and I'd be a big buyer on a pullback to 55, and it's just overdone now, and commercials weren't building record short positions, the largest ever record for them. They're more short crude now than they were at 140. So I think that the hedgers will get bailed out of this position and take it down under 60 bucks.
Okay, one of the things that I'd like to talk to you about when we get back from this break, which will be coming up in just about a minute or less, is about what you mentioned about the rand. Were you talking? Is that referring to the South African rand?
No, I'm talking about the country Iran. I think
Iran. Okay. Got it. Yeah. Okay.
I think there's a possibility of some type of conflict. So.
Oh, well, they've been doing that for 3,000 years.
Yeah. So it would just be another walk in the park. But if there's any damage to infrastructure of the Persian Gulf, any of those countries, which would happen in some type of hot conflict, then I think we could be looking at $100 crude, $80 crude. I'm bullish.
$100 crude? Boy, that would put a damper on inflation for sure.
Yeah, the Fed would have to. I don't know if they'd probably do QE with $100 crude instead of tight.
Yeah. Hey, listen, stay with us, Dale. We got Dale Pinkert from ForexStopHunters.com. We'll be right back after this break, 877. Okay, folks, we're back. We're talking with Dale Pinkert from ForexStopHunters.com. Dale, before you get to the stock indices, because I know you do some futures in that part too, do you do much in the gold market?
Yes, Larry, and gold's threatening a weekly breakout. I'd be a buyer of any break in gold. I think we're going to make a move up towards 1,500 sometime this year, maybe even 1,550. So I like the gold. It's been moving sideways for a long time. The miners have been underperforming, but perhaps they begin to play some catch up. So very constructive on gold.
Yeah, the gold chart, we have that double top up here, and if it can get we've actually took it out by a couple of dollars and then backed off because we really haven't had any. This is the biggest correction we've had these last 2 days has been $24 ever since we started back at 1238. That's just an amazing run.
Yeah, so I think it has legs. I'd be a buyer. Do your fib work and be a buyer on that. And the catalyst might be what I see happening under the surface in equities. Last time I was on with you, I said I was waiting for a move in the S&Ps up towards 2770 or so. We've extended that move, but my preferred short was a Russell. I'm buying TZA. That's an ETF on IWM, and if you notice, it's not making new highs with the Dow. It's not making new highs with the S&P, and even NASDAQ is beginning to struggle. And one of the darlings of NASDAQ is Tesla, and Tesla, with the NASDAQ going into a parabola, has not made a new high. In fact, it looks like a failing rally to me. Also, there's been some accumulation going on in the staples, utilities, REITs, which are kind of a safety trade, people moving into more defensive positions. So I think that we're almost there. We could be there. Maybe the S&Ps make a new high, but the Russell is my preferred short, which is ironic because the tax package was supposed to be more constructive for domestic corporations than for international corporations. So it's interesting. You look at the Russell today, and we're about unchanged to lower on the week with what everything else is doing. So I'm a big believer in shorting the relative weakness.
That could be a weekly reversal in the Russell if it does that after making a higher high and then closing lower. That would be a very negative sign.
That's the only one. That's the only one, and that's why it's the preferred short for me. So I'm looking forward towards something you'll like, the lunar eclipse next week. I think there could be some decent reversals into, I believe it's the 31st. So I also think that what's happening to the market when we do get this correction will not be or may not be economic related. Like, everyone knows the Fed's going to tighten in March. There's a traditional thing, Larry, a February break that used to happen in commodities every year, was pretty cyclical. But it's my belief that if people think that this move in the market was the quote-unquote Trump rally, and with Mueller's investigation beginning to head towards the Oval Office, towards a possible some type of interview with Donald Trump, if there's any thought of his presidency being in jeopardy, I think it's going to be political that could drive this correction in the market and a flight towards safety. So that's what I think is going to be the catalyst. The news that broke last night, Mueller knows that he wanted to fire him in June if we know about it. And so it's going to be interesting to see how this unfolds over the next couple months. But the Russell, to me, I have a target all the way down around towards if we get through 152, where we could trade 134. So that's still a big trade from here.
Yeah, that's just a 10% correction, which isn't really very much at all. That's for sure.
Maybe that's just the first leg.
Yeah. I remember when Clinton was having trouble back in when he was president back in the 90s. The stock market kept going up even though he was under the gun quite a bit and actually was impeached. But the market didn't react very much. You got to be careful here, Dale, because the guy that steps in there is Pence, and he's from Indiana. That's my state. You don't want to mess with those Indiana boys.
Well, maybe this is more of an analog to Nixon.
That would really be something. Yeah, that could be.
So,
that's for sure.
There's a difference between lying about an affair and possibly not being truthful with the FBI.
Wow. That's really cool. Anyway, how about the S&P? What is your feeling between the S&P and the Dow here?
Maybe there's another 30 handles higher. We could go to 880, but the S&P as well will suffer. I believe that we're going to get this correction in the S&P, but we could have one more push. I don't think we're any more than 3 days away from into the eclipse. Might be a great time if we're making new highs in the S&Ps to take a I want to hear the ice crack trade and short the S&P up there.
Okay, that sounds really cool. Okay, we have one other question, and that is, we don't know whether you follow this or not, but since you've got the interest of the group here, any feeling on the grain markets here and how it could be related to a weak dollar?
Yeah, I like the grains. They've been weaker than the metals. It's mainly been base metals, but we are in a La Nina year. That does lead to weather markets during the summer in the Midwest. Chinese have been stockpiling wheat big time, and I think that buying breaks in the grains is the right way to go.
One of our listeners is asking, he's from Park City, Utah, so he's a high roller. Where would you sell the S&P here, and how much would you risk, Dale?
Okay, let me just pull the S&P chart up here quickly. I'd look at a move between 28.70 and 28.80 and risk 20 handles. Looking for an eventual break down to about at least 2700, 2650.
Okay, and finally, this relates to the foreign exchange markets a great deal, and that is interest rates, the bonds and the notes. Any feeling on that on a longer term?
Yeah, we had a breakout over 262, although I think that we're getting close to where yields may peak and get some type of pullback towards 2.5. But to me, the trend looks higher in rates, and I think eventually we're going to see a 3% 10-year or higher.
Yeah, that could very easily, because remember, we used to be at 4 and 5% regularly all the time when the old people used to get their money from the treasuries, but that doesn't happen anymore for sure. Hey, listen, Dale, we're winding up here. Now, how would the folks reach you? It's forexstophunters.com?
That's my Twitter handle, @forexstophunter. And I host a free room for www.forexanalytics.com. And you could join us every day at 8 a.m. Eastern Time, and we cover currencies and indices, metals, oil, the whole gamut. We pay attention to everything, Larry.
Hey, that's great. Dale Pinkert, God bless you. Happy New Year, and we'll have you on again soon, my friend.
Thank you, Larry. And
thank you,
to all
Dale.
your listeners, bye-bye.
Bye-bye.